central banks accumulating massive amounts of gold, and there's not that much gold out there. So they don't want us to accumulate those things, and so they suppress the price by creating a whole bunch of silver and gold that do not exist, while they themselves, the powers that be, are massively accumulating it.
Commodity trading means you buy and sell commodities rather than finished goods, like a house, or financial assets, like stocks and bonds. A common form of commodity trading is investing in precious metals, namely gold and silver. As an investment asset, gold and silver have very different properties and uses in your portfolio. Precious metals are different in that they have relatively low commercial utility. Compared to other metals, there are relatively few consumer or industrial uses for assets like gold and silver. The main thing that differentiates investing in precious metals from other investments in raw materials is profit. For most other commodities, investors assess value based on consumer supply and demand. In today's video, we will tell you why Lynette Zang thinks that gold and silver are the most undervalued assets despite their volatility. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update.
The system is clearly breaking down. Even looking at this completely dysfunctional stock market where everything physical has been turned into a security. And once it's a security, they can multiply that to make it look like there's a whole lot more than there really is. As you talked about the gold and silver, there's a finite amount of it.
Gold and silver are particularly popular commodity investments, largely due to their historical relationship with silver. Governments once used gold and silver to make their currency, although no major economy uses gold or silver as the basis of its currency anymore. Investors still view these two metals as active stores of value. Silver is more volatile, cheaper, and more tied to the industrial economy. Gold is more expensive and better for diversifying your overall portfolio. Either or both can have a place in your portfolio. We know that there is a recession ahead of us, and this is going to be much bigger than a recession. We already have more hungry people, and more food insecurity is only growing, and prices are going up, and the system is clearly falling apart. Even looking at the completely dysfunctional stock market where everything physical has become security, and once it's a title, they can multiply it to make it seem like there's a lot more to it than there really is. Speaking of gold and silver, there is a finite amount, and already a few years ago, when we had the short sale of silver, the SLV Silver ETF changed their perspective because they knew they couldn't get enough money for the basket. So we have money that is spent on production. There is a finite amount of it, and it is such an undervalued secondary monetary metal. Central banks are hoarding massive amounts of gold, and there isn't a lot of gold out there. So they don't want us to hoard this stuff, and they are suppressing the price by creating a bunch of money in gold that doesn't exist. We are going to witness massive depopulation. When we go through this, 80% of the population ends up in absolute poverty. We have witnessed the rise of financial power in the East and the decline in the West. Low-cost assets also tend to be highly volatile, particularly as small price fluctuations have outsized effects on the underlying investment. The price of gold tends to move inversely to the stock market. Gold is what is called a counter-cyclical investment. This means that it tends to rise when traditional assets fall and vice versa. Historically, the worse the stock market is, the more investors flock to gold. Conversely, when times are good, investors tend to get their money out of gold and into assets more tied to the broader economy. In contrast, silver tends to move with the overall economy, at least more so than gold. This is largely due to the same trading applications that make silver a more predictable asset. When the economy slows down, industries need less money for manufacturing, which drives prices down. There is no objectively best investment. It all depends on your position in the market and the state of your portfolio. Silver is more volatile, cheaper, and more tied to the industrial economy. Gold is more expensive and better for diversifying your overall portfolio. Either or both can have a place in your portfolio.
Since 2008, we've been watching a globally coordinated central bank movement, whether it's deflation, inflation, reflation, whatever. But you're seeing too many coordinated moves, and now all of a sudden these moves are going in the opposite direction, and it justifies the inflation, doesn't it? So, we've been witnessing the rise in financial power of the East and the decline in the West.
That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.